Hello everyone, welcome to our special event today about our Master in Finance. I'm Mathilde from the admission team at 𝐼UM, and I'm pleased to introduce to you our program director, Professor Moscato, as well as Mr. Fabbri with us today.
Hello guys, good to be here with you.
Good evening, everybody.
Hello to the both of you, and thank you for being here today. We have quite a unique event today since it's not a classical webinar as we usually do, but we will have a long talk about the impact of AI on the financial industry. We will also discuss how our master program at 𝐼UM is covering it. So Gregory, Leonardo, the floor is yours.
All right, thank you very much, Mathilde. Maybe before we get into it, because some of you, I imagine, may not be familiar with Leonardo. Leonardo, just in a short period of time, could you just introduce yourself in a few words?
Sure, definitely. So first of all, I would say that my background, it's from a traditional finance investment banking. I used to work for Goldman Sachs in London. I was on the trading floor. So I studied economics and finance in UK. And then joined for the analyst program at Goldman after completing all the internships there, the spring week, the first year of university, and the summer internships, the second year of university. After that, I decided to pursue a master after the analyst program in Goldman at Pompeu Fabra University in Barcelona. It's the public university, under the supervision of Professor Gustavo Deco, who is the leader of the laboratory there. And I studied cognitive neuroscience. And from there, I transitioned toward the career in AI, relocating to Monaco. I opened my artificial intelligence laboratory here. It's called AI Monaco. And my job is to educate investors, ultra high net worth individuals, and investor in general, private investor in general, from understanding AI and educating them in navigating the AI landscape.
And on top of it, you're a professor now at 𝐼UM, so
correct. Starting from this year.
All right, good. Well, it's very glad to have you with us today. I'd like to really start our webinar with a question probably people don't ask themselves. From your perspective, what is the biggest misconception currently that we have about AI, in particular when we think about AI and how it applies to finance?
Sure, definitely. It's a great question, Gregory. I think, first of all, we need to be sure that we do not restrain the term AI, artificial intelligence, only to the word chatbot. I think chatbots are a part of the equation. They are definitely not the whole of it. And I believe the real value in finance, at least in the finance industry, is much more operational and less glamorous than understood probably in the general public. Things like fraud detections, document analysis, equity research, compliance, personalization, etc. Those are the places that are really being revolutionized in the finance place. Of course, AI is not going to replace the majority of those processes, but it's going to for sure accelerate it. And it's, again, a misconception that it will replace all the humans or the operators in the finance industry, because it depends heavily upon data quality, governance, explainability, human judgment, which are all fundamentals to a, let's say, well-functioning financial market.
All right, thank you. And building on this, when we think about the financial industry, what do you see, or what maybe segments within the financial industry or the banking industry do you see that are being disrupted maybe the fastest?
So I believe from my understanding, it's probably the most repetitive and data heavy and time sensitive work are being automatized, if you want, or made more efficient the most. And this includes usually processes like KYC, know your clients, customer support, computation workflows or compliance, document handling, anything where you can find, let's say, anomaly detection or unusual pattern recognition, like fraud monitoring, for example. It's great for AI. AI, it's applied domains at best, and it increases a lot the speed and the efficiency at which it's done, and the scale, of course. So I believe that it's probably the area which is being disrupted the most. Another one where Monaco feels quite close to is wealth management. I believe that bankers are again in a very good position of still having an edge versus the AI, thanks to their let's say intimacy of the relationship with the client. But at the same time, AI can augment their advisory capabilities thanks to a much higher personalization, a much faster processing of the information, etc., etc. So these are the fields I believe being disrupted the most.
Well, you were mentioning Monaco. I mean, of course, private banking is super heavy, and so we're starting to see, in fact, the sort of super augmented private banker of the future is about to appear. How about on the asset management, or I imagine that maybe even on maybe the hedge funds or even the family offices? What do you see, and in particular in Monaco, for example, how do they use AI? What do they do with it? I mean, I imagine it's quite different from what private bankers would try to do.
Yeah, definitely. So I believe that there are certain areas where it's, let's say, straightforward and intuitive to understand this transformation. Like, for example, as you can imagine, private bankers have to deal with clients all day long, and sometimes these clients operate in a complex multi-jurisdiction globally, and thus having an AI which is useful and handy in handling hyper-personalization for those clients, it will be crucial in the future. So for anyone trying to get in this industry, getting to know those process, kind of tricks and tips in order to navigate this space. I think as a student, it's fundamental in order to increase your employability within the wealth management industry. Of course, there are certain areas where AI it's still adding much more, let's say, value than simply statistic process in the past. Like, for example, another thing where I can see it adding value is due diligences, especially on alternative investments. Like, there are some asset classes, especially here in Monaco, that we are seeing, like, for example, real estate is one, but art, yachts are another classic one. Those are things where AI can help process data from larger databases and increase your insights of reporting to your clients and advisory to your clients. So I think overall, the private banker of the future, especially in Monaco, will need to be much more fluent in using those technologies and being thus augmented in their decision making, in their advisory, in their in general relation that they keep with their clients.
And so if we look maybe at the asset managers, I mean, we have quite a lot of independent asset managers in Monaco, and maybe even the family offices, those who are really on the buy side of things. How can they leverage AI, or how are they currently, and what do you see them doing?
So I think from their perspectives, there are probably three ways in which they are adopting AI and using AI on a daily basis. One is definitely to improve existing processes in the sense that they are becoming faster and cheaper. So stuff like research, reporting, onboarding, compliance check, customer support, those are all processes which we are seeing being automatized the most, and those are the ones that are going to be quickly enhanced or make more efficient. Second is decision making. So asset managers, but in general, whomever is trying to let's say extrapolate alpha from navigating the market has to extract signal from large messy data sets. AI is great at this. It helps you let's say enhancing this capability of navigating environments where you have higher uncertainty and you need to perform a specific, very precise analysis. And then I think the third point is going to be and this has been a bit, let's say, lagging, but I believe it's going to come soon. It's the interface between the institutions and clients. If you start to look at some of the bigger asset managers, they're starting to buy maybe external companies providing more personalized, more responsive, more scalable, let's say, answers to clients. And I think this in general comes down to AI reducing, one, the cost of processing information, two, increasing the speed of analysis, and three, improving the quality of the service. Yeah.
If we extrapolate, because these are a lot of changes, but things are continuing to move and progress. 5-10 years down the road, where could we be? I mean, where do you see this industry in the end, you know?
So it's actually a great question. It's a good moment to probably recall a moment when I was on the trading floor at Goldman Sachs in London. I remember being down in the trenches in the credit department, and they had an algorithm starting to step up their trading activities. And it was starting from a very small, let's say, notional amount and going all the way up to bigger amounts in a matter of probably 1 or 2 years while I was there. So I think that in 5 years, the industry will be meaningfully different. That being said, of course, not unrecognizable in the sense that portfolio manager, bankers, analysts, traders, advisors, they will still be there. That being said, their day-to-day will be much more augmented. Team will be leaner in the sense that maybe slightly smaller, and routine tasks hopefully will be automated. And the bar for entry-level roles, and this is something that we are seeing, it's starting to be, let's say, slightly higher in terms of at least what is expected from the employer, from the person who is employing, the company employing, to the students coming to join the role. And when I say this, it's usually down to adoption of AI, or at least fluency in this matter. I believe that if you are starting now as a student in whatever course you are joining, you should be using in some way AI, so that once you are out looking for a job, I believe this will enhance a lot your capability and differentiate your profile across the street.
You're pointing out to something probably that is extremely important to our candidates and the people attending the webinar, which is to start to think about, so what will they want from us, right? What type of profile will they expect to see when they hire young professionals? What do you think? How is this going to change? I mean, compared to what we did, what would a future employer, would like to see in a candidate?
So if you want from, let's say, our perspective, back when I was applying to Goldman, let's say around now 10 years ago, I believe that they were still similar to nowadays. That being said, with a boost towards the computational side. What do I mean by that, Gregory? The fact that firms still want 100% strong finance fundamentals. So things like accounting, valuation methods, corporate finance, those you need to know, and you need to be very good at that. That being said, I believe that in comparison to when we started, when there was maybe Excel and a couple of other tools that were enhancing our, let's say, analytical skills, analytical capabilities, nowadays you have to be comfortable working with data, digital tools, AI-enabled workflows in general, which is much more fragmented maybe than it was when I joined. So probably I believe that nowadays the companies are looking for these sort of well-rounded students that have to satisfy those requirements, which are going to be, again, critical in the future.
How about, because very often students ponder, the importance of, coding, machine learning, do they all need to have like some kind of a PhD or in those matters to have a chance in the future, or what do you see?
So I think that here the point is multifaceted in the sense that first, there are different roles within the finance industry, and one needs to understand which role they want to let's say, work in, and how much is that involved into, let's say, your analytical or your coding capabilities. Of course, if you are going to join a trader or a quant role, it's going to be much more the expectancy from you. That being said, in other places like the more the relationship side or the sales side, it's slightly less. It's still good if you are fluent in it, but it might be a bit less. So my idea is that probably a good understanding of how to at least read the code would be necessary. It doesn't matter if you have not developed yourself or if you are not proficient in one language specifically, you can become proficient. I think if you know one language in particular, it's easier to switch across those. That being said, I believe that even if you are not the most, let's say, geek or math-based person, it would be good if you're able to at least skim across and read what a coding, let's say, script tells you. Yeah.
All right. All right. I don't know if we have already questions. If you haven't yet posed questions, I make sure that you put them in the chat, because then we will, of course, try to spend some time addressing them specifically. Mathilde, do we have any questions yet?
Yeah, we have one already.
Okay. Maybe just before we address it, maybe when you look at this combination of skills you were mentioning, so combining the technical, the coding, but also, I guess, the strong interpersonal and the soft skills, for a student joining now, what should they expect of a good curriculum? I mean, I would say, before we even talk about what we do at 𝐼UM, but what would be now, I guess, the norm, or at least the best practice norm, right? What if you really want to aim at very good careers, what should you look for in the programs that you're about to choose, basically?
Okay, it's a good question. It's a tough question. I believe that what you should look is definitely not necessarily maybe a place that is going to teach you the technology for its own sake, but at least put you in the mindset and make you start to think on at least how to operate in a market where technology is already reshaping the workflow. So that's, I think, the most fundamental part. And what does it mean? How does it translate into real life? I mean, at the end of the day, it has to have a practical application, or at least a concrete application. So universities like 𝐼UM does should in some way integrate, of course, the technology of nowadays into our curriculum, but as well the applied side of all these. Otherwise, it might get lost into translation.
I see. All right. Thank you so much. Mathilde, let's hear for this first question that we have.
So I'm going to read it for you. We have a second one now, but the question has different question in it. So maybe it's good if you read it on your side as well. So Julian is saying, since Mr. Fabbri worked on the trading floor of Goldman Sachs and now opened a business in AI, what do you think about the origin of DeepSeek? Originated hedge funds to make autonomous trading decision and then used knowledge built to LLM. And would you consider trying to use AI to improve trading decision?
I'm reading it by myself. Reading it by myself. Sorry. Do you consider trying to use AI to prove as well with the AI financial market? Okay. So it's a big question. Thanks for asking, Julian. First part, I believe that DeepSeek is a great example of what a relatively small team of people could produce without having all the scalability of the hyperscalers in US. So it's a great example of, for example, open source technology, open source LLM. And even though maybe it doesn't reach the, let's say, state-of-art performances of the private ones, let's say, it's still very competitive. So for me, it's definitely something that could increase our decision-making capabilities under uncertainty and thus trading skills. It should be used as such. And me personally, Julian, as of course, a person that has been involved in finance for 10 years, I have my own personal account, as everybody who is involved in finance usually does. I like to use those kind of LLMs at the end of the year in order to download all my trading activities and skim through and interrogate the chatbot in order to understand what are my strengths, what are my weaknesses. So I think definitely it's a good tool to use if you want to improve your trading decisions. And the second question, how could AI market any risk? So it's a good question. If you look at, for example, what's going on in the prediction markets, if you take something like 𝐬𝐞𝐽 or even better, Polymarket, there have been ongoing discussions as to whether it would make sense to, for example, let some trading from insiders be legally allowed on the markets. Why does this discussion is ongoing? It matters because the insider trading holds the content inside this trading has an informational value. And this informational value brings the markets towards efficiency. So if, for example, markets like prediction markets, in this case, Polymarket is not regulated. So it's a good example because it's an unregulated market versus traditional financial markets, which are regulated, where insider trading is, as of now, illegal. I think AI could, in some way, improve the way we are processing information thanks to these prediction markets. And indeed, if you look at the efficient market hypothesis from Eugene Fama, Nobel Prizes back in the 70s in the economic, let's say, tradition, you studied this during your years of undergraduate, you have a market which is already quite efficient when it comes to the weak form of efficiency. So includes the prices nowadays of stocks include all the historical information immediately. The second, let's say, form of efficiency is the medium form, and this includes not only all the historical data, but also the data up to now. So as soon as a news comes out, the stock price adapts. So if you mean, Julian, in that sense, that AI could theoretically trade immediately on the back of the news, something is already ongoing as of now. It's leading towards this perfection of efficiency, so it's still leading towards. I don't think it's 100% efficient. Of course, there are degrees of efficiency across first market conditions and second geographies. I don't know if Professor Moscato, would you like to add something?
Yes, I do have some views on that. I'm not sure if I have really a lot of time to express them. I would be a bit cautious about that because behind that, often we imagine if we had those large language models or other tools that would allow us to immediately incorporate, it would improve predictability. And it turns out it's not what it means. It means simply that the prices would adjust better and more rapidly to the information that we have. It doesn't mean suddenly we automatically get an extra insight on the future that would allow you suddenly to get an edge, in other words, to do something before the others would do. Because if it is, in fact, doable, then the more AI we'll have, then it will be done. So we will go back to a form of, yes, it is getting more efficient, yet not necessarily more predictable, which is defeating a bit the purpose of what we're, because we all want to, well, ideally have that form of insight about what's coming before it comes. So it's a bit of a difficult game. I mean, this has been haunting financial markets for, well, as long as I think it has existed. So it doesn't mean like trading will become easier or predicting the future would become automatically easier, or we may have better insights, the pricing itself. So predicting the way the price will adapt to our understanding of the future will create new opportunities, but also new challenges. And therefore, well, we will still work a lot to still try to gain that little edge that makes the whole difference. And I'll stop here.
I completely agree. And let's not forget, at the end of the day, back in the days, it used to be called machine learning or econometrics, all this statistical approach to decision making, to trading. And it has been very well inspected and investigated across different realms from great companies like Renaissance Technology or Sigma in US. And those have been augmenting their decision making capabilities using machine learning. So it has been a study, let's say, a field where the studies have been ongoing, and I believe that the more we go on, the higher, let's say, the bar to reach those levels. And they're already trading at milliseconds, so for humans, it's almost impossible to reach those capabilities.
Indeed, indeed. I think we have a second question.
Yes.
Or third, I should say, in fact. What do you think about code coders and the effect it has on SaaS market, or reacting very negatively, but it's fair in your opinion? I'll let you answer this one.
Sure. Okay, I'll take that. I think this is a very, let's say, concrete question, in the sense that maybe not everybody is understanding what Julian is asking. Here, there has been recently, in the past probably couple of months, a repricing of stocks in the public markets related to the SaaS sector. SaaS means software as a service. And the reason why the repricing has been happening, as Julian suggests, is the fact that cloud code, or vibe coding in general, has been, let's say, pushed to the extreme, where we could create an app, not, let's say, entirely the same as Salesforce in one day, but you could get a good, let's say, 50-60% of the job that Salesforce does in, let's say, a shorter amount of time. So the idea here is first to think about the replaceability of the company in itself, and second is the trust that the company creates towards the client when it operates in a regulated environment. So I think there are different ways to answer this question. I believe one, it's definitely to think about the fact that not all SaaS are the same. Some are based on the consumption. So the more you consume, the more you pay. Some other are based on licenses. If you are based on licenses, maybe because of less employers, you might have some problems in the futures, and thus you might have to transform your business into a consumption-based business. Second, I think there was a great article on the Financial Times referring all the newspaper industry back in the 2000s. Back in the 2000s, if you look at corporate profits coming from the newspapers industry, they used still to go up, while instead stocks were going down in let's say 2000 to 2005. Why did this divergence happen? It's because the market was pricing that in the future the newspaper business would be less profitable, even though corporate profits were still going up. So here the question is, do we still expect corporate profits to be as high as now? Or do we believe that the industry needs to be resettled in terms of price earning, in terms of multiples that we have been seeing in the past running very high? My take is it's not the end of software, 100%, not the end of SaaS, it's the end of complacency. So companies will be much more efficient going forward. I think...
Oh, we have a new question, in fact. Oh, yeah. I didn't see this one. So do you believe AI should be treated as a core skill across all fields, similar to how digital literacy and the internet became essential about 20 years ago? And if so, can individual and organization effectively integrate it into their work?
Shall I take that?
Sure.
Okay. So thanks for the question, Narek. I think here the answer, at least for me, it's yes, in the sense that as calculators, became sort of essential. If you do a CFA exam, CFA is probably one of the most recognized industry exam in finance, Chartered Financial Analyst. I would suggest anyone who doesn't know to check it out. It's a great reference point for whomever is a professional in the industry. If you perform those exams, you will need at one point to use calculators. So I think they're already part of the process if you look at it from historical perspective. And let's say a smaller perspective. So for me, going forward, in the same way as the calculators and computers nowadays, like Excel, for example, have become an essential tool, in the future, AI will become an essential tool. So if this answers your question, for me, the answer is yes. How can they effectively integrate it? It's a hard question to answer. And one of the main reasons why it's hard is the fact that there is a timing element assigned to this adoption. If you start to adopt it now, that's great. That being said, some of the skills that you are maybe developing now, or some of the application that you're using now, may become obsolete, or let's say, yeah, obsolete in a matter of a few years or even a few months. So the pace of innovation that we are seeing in the field, it makes it very hard to navigate it effectively and to, let's say, implement it into a company which usually has some, let's say, decision-making process, which is not, let's say, as quick as the pace of the innovation goes. That's why, for example, I created AI Monaco in my last 4 years, exactly to help clients navigate this environment. And I think it's needed someone that helps you translate these technical requirements into practical, concrete adoptions.
Oh, if I may add something, because of course, this is a difficult question, not just for Leonardo, but for us also as an educational entity, right? So yes, I mean, to us, it has become obvious that we need to integrate in a very formal manner, from helping you, for example, to develop better prompts for now, to also working in meaningful projects where you can really leverage AI to accelerate your access and understanding of certain data and certain industries, etc. But it is also about finding a balance in making sure that you use those tools in the best manner possible. In other words, where it does not replace your own critical thinking, where it does not replace, in other words, your own use of your brain to really figure out what's going on, but where you use those tools in your learning, so of the material that we teach, and also in the way you are going to approach assignments, etc., in ways where you get to learn more, not less, which is a tricky one, because it's often a temptation of students to simply try to use AI to get the right answer or something like that. So the trick is really to work with AI on something else, on something where you will need to provide your own perspective on things, your own understanding, where the complexity of the project itself will probably not have a right or wrong answer. Therefore, it will also be linked to your ability to make sense, digest, and then form your opinion about whatever the project is, and therefore then being able then to convincingly, put your ideas forward, and hence where we're back with also making sure you have the right soft skills behind them to also convince people that your solution, your idea is probably worth listening to, and hopefully if it's an investment idea, maybe to follow your advice and invest, right? So we're definitely trying to balance it out with the big question, of course, is it moves so fast. We're always asking ourselves, by the time we put something together, isn't it already obsolete because it can be done differently? But hey, that's part of the challenge. It's part of the excitement as well. We live in a very exciting times from that perspective, where things are changing, and potentially in a very positive way, where we get to know so many things and to learn probably potentially even faster than we were able to do before, because we have more and more access to many things. So then it's about finding that right balance and making sure your brain is still your priority whenever you do anything. All right. Mathilde, do we have any last questions? We have more minutes. What do you think?
So at the moment, we have no additional questions.
All right.
From our viewers, but maybe some more will come. So if you have some time and want to maybe cover a bit more about the program, it's something we can do.
Of course. I mean, we have to think that the Masters in Finance has been evolving within Weight AI to think on a yearly basis about what we can do better, what we can do differently, how can we adapt to the ever-changing landscape of the financial and banking industry. And in order to do that, well, we, for example, also made sure that we have tailored specializations. So specializations, because we were also very aware that they were doing very different things. Therefore, the skill set that you need to develop will have also to be specific. So, I mean, again, I remember the Masters in Finance is a Masters in Finance where our initial focus is on making sure they have a core knowledge of finance, like a strong background, no matter where you go. I mean, again, this has not changed. Competency is not an option. But then, for sure, if you want to be a private banker, or if you would like to be a portfolio manager within an asset management company, or even within for example, a family office, then the skill sets are really different, right? The focus, and for example, on the private banker, if you cannot have strong interpersonal skills, you're doomed, right? If you cannot relate to a client and understand that clients and create the trust that you need, and then understanding, having the skills and the right probably teams and AI with you to find the right solution to that client's problems, then you're in trouble if you cannot do that. So our focus is also on those dimensions. But other side, for example, if I'm looking at the private equity and investment banking track, is focusing more on the transactional side. So we need a different set of focus. Right now, we encourage students, for example, to also integrate a deeper understanding of businesses, trying to understand both the businesses from a business model perspective, a competitive landscape perspective, how even other macro elements may affect those specific businesses, and therefore to understand them deeply, to think about how you can acquire them, restructure them, sell them, potentially, how much debt you can put on them before them, collapsing totally and things like that. So again, a different skill set that we need to focus on. But and then we have the real estate, for example, the latest one, which is surprisingly an industry that is slowly but surely also seeing some great innovations. And AI most likely will disrupt a number of dimensions within the real estate and other technology as well. So we also look at real estate, and we focus on different dimensions, including having probably more a double view from development and the risks that go with them, and therefore the financing and the type of different liability structures you're going to have in the balance sheet for those developers versus those once the project is out there. And then we even have fun from, what happens when everything is there, but you take the perspective of the investor. How do you integrate it into portfolios, investors' portfolios and stuff like that? So again, one big core, so strong everyone, there's no exception to that, but then also very, very specific. And therefore also the way we integrate AI in the projects you have to do are, of course, going to fit with the expected outcomes, professional outcomes that you're pursuing after that.
Totally agree. If I may add only one point to what Professor Moscato has already explained, I believe that something I wish I had back in the times when I was at university in UK was an applied side of my theory, which unfortunately I didn't have it offer from the university itself, but I had to create it myself. So that's why I applied to Goldman for the internships back in the days. I believe IUM does a great job at making things concrete. So the students are able to learn not only the theory per se, but they are able to learn the applied side, the applied project, the case work, through, for example, internships or exposure to practitioners who do it on a daily basis and are able to tell you all the, again, guidelines and tricks in order to navigate it at best. And I think this, for me, it's a quite critical and crucial add-on that IUM includes in the curriculum.
Well, thank you, Leonardo. I think this is a great punchline for our finish. Thank you, everyone. I think this has been quite an intense but quite insightful webinar. I hope you enjoyed it as much as we clearly did. And well, look forward to seeing you very soon.
Thank you very much.
All right, thank you, Leonardo.
To both of you. It was a really interesting session. So if anyone wants to rewatch it, it will be up on YouTube in a few days. And also, I just wanted to add before we end this session that we will have our last open day of the year before the start of the program in September. On the 11th of April, which is a Saturday, we have a morning and afternoon session. It's a great time to meet our program director in live and to meet with some students and get a campus tour. So if you are willing to participate or around Monaco or visiting at the time, feel free to visit our website to register, and we'll be happy to see you there. Thank you very much to the both of you, and thank you for everyone who joined us today, and wishing you a great evening.
Have a great evening. Bye-bye.
Thank you very much. Bye-bye.
Bye.